We also have some breaking news we want to bring you now from the Federal Reserve. We've got Brian Chung standing by live in our newsroom with the latest. Brian, what is this about?
Hi, we got some breaking news. The Federal Reserve has just announced that they are opening a commercial paper funding facility. This is what they call a way to supply short-term money to companies that may be under stress as a result of the coronavirus. For those that aren't aware, commercial paper is a way for companies, not just banks, companies across the board, to finance short-term needs that they have. So commercial paper could be 90 days, for example, which would cover 3 months. And this is basically short-term corporate debt. There's been concern as of late that that market has been drying up and that companies that have been squeezed on margin have not been able to issue commercial paper or find appetite for purchasing commercial paper because everyone is hunkering down. Now, what this commercial paper facility that is opened by the Fed will do is it will allow companies to go directly to the Federal Reserve to roll over any commercial paper obligations that they have so that they can extend the short-term funding that they will have access to. Now, what's important to note about the commercial paper funding facility is that unlike what a lot of the Fed usually does, this is not just for the banking industry. So any type of company, any type of corporate, whether it's a pharmaceutical company or even an airline company, they will be able to go directly to the Federal Reserve if they meet certain eligibility standards to have their short-term debt rolled over. Now, what's important to also note about this is that the Fed didn't do this by themselves. They needed to coordinate with the U.S. Treasury to find some sort of guarantee for this. So the Federal Reserve did work with the U.S. Treasury to get $10 billion of credit protection via the Treasury's Exchange Stabilization Fund. But again, this is brand new news coming from the Federal Reserve, and this is a message for them that they want to support corporate debt markets as the stresses continue. Alexis?
All right. Thanks very much, Brian.